Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
You're watching Share Shootout here on CNBC Africa First with Business Worldwide. Welcome to the show this evening. Before the break, we had Nic-Norman Smith from Lentus Asset Management with his two picks. Those two picks, Sasol and York Timbers. Sasol getting the thumbs up, York Timbers the thumbs down. Ian Cruickshanks, the independent analyst, went for Wescoal. Nice business, tidy business, nice profit profile into the future. Not the cup of tea of Nic-Norman Smith. However, it doesn't mean that it doesn't have to be yours. Nick is just more conservative on this evening than usual. He's a conservative kind of guy. And then Firstrand. He likes Firstrand as the pick of the bunch. However, he would go for Standard Bank. The memorable quote from Ian Cruickshanks in the first half of the show: they don't have a strategy, they can't even get a single chief executive. Boy, is he going to have a nice time at the next results presentation. Right, because now there are two guys who can take you down instead of just one. Tell me what, I think I'm going to make Nic-Norman Smith sweat, because usually in the second half of the program the gentlemanly thing to do is to go to the person who went second first, but I think we should make him sweat, make him really question whether or not his acceptance of your first round pick was a good idea or not. So let's put your final pick on hold, okay, Nic-Norman Smith, and let's go to yours on Grindrod. In 30 seconds, with global trade in the doldrums, why go for a shipping company?
Because this is the time where you buy these companies. The industry is under massive pressure. If you look at any metric in the global shipping industry, it's at rock bottom. There's a massive oversupply of ships. People are very nervous of the industry. And that's why you can buy this business at just above book value. That's the core of the business. It is moving, building an African logistics business. And the best part of the business is the ports business that they're building. That is still a very small part of the business at the moment, but that's great blue sky that you're not paying for. So you're essentially buying the shipping business and you're getting the rest of it for free. So if you get some nice African upside, fantastic.
Okay, do you like it, Ian?
Yeah, but I'll go with a 50-50 view on it. I wouldn't buy it.
Okay, well, but then it's a no. Okay, but why not now?
Because I think they have diversified quite considerably. The move into financial services, into banking, that's a fiercely competitive area. Norman said so himself. It's a heck of an area to expect to make good profits. Only the majors are going to do that in the short term or the medium term. And I think regarding the shipping business, there's an oversupply, a significant oversupply of shipping worldwide, and it's not being utilized. That's going to keep shipping rates down.
That may be the case, but in the defense of Grindrod, they've been very careful in terms of fleet management. Their ships are, and forgive me, I don't have my sailor suit on, so I can't tell you the technicals, but they've got smaller, more nimble, not these massive bulk carriers that are possibly the ones that are sitting empty in the ports.
And they've been very astute, so that they timed the cycle, skill or luck. In the early 2000s, they bought a lot of capacity really cheaply. They started selling that out before the bubble burst. There was no way of avoiding it. If you're in the sector, you were going to be under pressure. And they've started, they've started sort of floating their rates now, so they're betting on an eventual upturn.
But you look at the Purchasing Managers Index numbers from around the world. Yes, there is a semblance of a recovery in the United States, but it's not a recovery without risk. China desperately trying to slow itself down to try and manage its own asset bubbles within China. Global trade isn't what it was in 2004, 2005, the last time we were excited about Grindrod. Why now?
Because now you're not paying what you paid back then, and you're not getting seriously burnt, because paying for the great story at too high a price, you were going to get hurt. So now you're buying it when the sector's really out of favor.
So I should be buying a pile of platinum right now. I should be buying all of the dogs.
Absolutely. As long as they're good businesses and you think they've got a future.
Oh,
for sure. So yeah, Bruce, the shipping oversupply is starting to clean itself out. A lot of shipping contracts for new ships have been cancelled. It's supply and demand. It's business cycles. These will turn.
Your time is up on this, Ian Cruickshanks, as to why you're shooting it down. You don't mind it, but you're saying the cycle is not in your favor right now.
Here's an investment manager who's got a very high risk profile. Why buy a stock just because it looks like, it's cheap? It could stay that way for the indefinite future. I think the world economic business cycle is such it's going to remain not necessarily depressed, but at a low level for the foreseeable future. That could be 5 years before we get a strong pickup when commodity prices will grow and Grindrod will have their day again.
That was the most deliciously personal jibe I've had on this show from any one of our participants. I call you Captain Conservative. He says you're an investment manager with a high risk profile. Where are you in this?
Buying cheap assets for me is low risk, Bruce. If I buy something at 100, 100, it can drop 100. If I buy it at 50, your downside is much
extremely
lower.
limited.
Provided you're buying, you can't just buy the dogs that are rubbish. You
Absolutely.
need to buy the high quality businesses.
Completely.
May I just make a closing point there? The low point is ground level. There's still 4 basements to go. Beware.
Okay, you're on form this evening, Cruickshanks. Ian Cruickshanks is absolutely on form when it comes to attack, but when it comes to strategy, he tore a strip of Standard Bank for its duff strategy in his view. Let's see whether or not his share shootout strategy will test his own high watermark on this particular point, because here you're going for the biggest go-go stock of the top 40 shares over the last 5 years. It has been nothing short of remarkable. It has made its chief executive independently wealthy beyond the wildest dreams of anybody, certainly within 100 meters of this building. Why Naspers? In 30 seconds.
Leadership. 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 Koos Bekker is brilliant at strategy, strategic planning. He got ahead. This started as a newsprint company in 1915. It's grown out of all sides into IT outside South Africa. You know, I think that the move into China, into Russia, he's got ahead of the competitive field, not just in the newsprint, but in the IT sector as a whole, in providing services that customers are going to want and carry on wanting.
Time up. This is a company, Nick, that's 140 times bigger than Times Media, which is going through a repair patch-up process. It is Caxton is sitting at an is worth 8 billion. This is a company worth 280 billion. This is a considerably large media business that is more of a technology, transactional, interactive business than the staid companies that stayed in, they're called staid because they stayed in South Africa, the staid media companies that have remained here. It's brilliant. It is remarkable. Koos Bekker has shown his foresight and his fortitude and his courage, and he has been very successful. Tell me why you're going to shoot it down, because I know you will.
Overpriced, overpriced, overpriced.
Is he a high risk investment manager?
I mean, I don't even know what to say. I mean, buying Naspers for me is one of the highest risk investments you can make on this market. It's just too expensive. Remember, you're not buying this wonderful pay TV business. You're buying a Chinese internet company trading at a premium multiple, because that is the vast majority of Naspers's earnings. And it's continued to grow. But remember, in 1999, the tech stocks looked expensive in America. Didn't mean they didn't carry on going up until 2000s before it collapsed. So we talk about barriers to entry. Barriers to entry to start a website, yes, they've got great network effects and they've got a huge, hundreds of millions of users in China, but the government can shut it down if they decide. Someone else can start up a website that's better. So there are too many risks in that business.
All right, let me ask you this question then, Ian. If I said to you, here's 100,000 Rand, you can invest it in Naspers, but why bother with Naspers when you can take your 100,000 Rand to Hong Kong and invest it directly in Tencent? The Jill Marcus says you can take this 100,000 Rand and put it directly into Tencent.
Oh yes, but
why
I
not
can't
just do that?
So that's why I don't do that.
No, but let's say, for argument's
Yes,
sake,
okay.
you could. Why not just do Tencent and forget the rest of Naspers?
Because I'd like the spread of other opportunities, Russia, of South Africa itself, and where else Koos Bekker will go. If you were looking at the retail sector, would you not have bought Shoprite Checkers because it had got too expensive? It stayed expensive. My philosophy
You could buy
is,
Shoprite Checkers on a 10 multiple 10 years ago when it was out of favor.
But when it was out of favor, but it was in favor 5 years ago when it was at a much higher multiple and continued rising, and it has sustained its high levels. Why will Naspers not sustain these high levels?
Follow the winners. That's my view.
They may do, Bruce, but the odds are against you. So investing is an odd game. No one knows. The future is very uncertain. But the odds of making a good investment return, paying the kind of price you're paying for Naspers, it's not worth it. You can tell your mates around the brow the one that you got right, but all the others...
oh, you guys make life so difficult. So just for the record, what do you do with Naspers?
I think Koos Bekker is one of the outstanding leaders of our generation, but way too expensive. Definitely shoot it down.
And so the official words are? The official words are?
Shoot it down.
There we go. You see, we need to make it official. You've been shot down on that particular front. So, 3 compelling arguments. I didn't like the York Timbers argument one little bit, but I did like the Sasol argument, and I did like the Grindrod argument. Is it a timing issue? Will that count against him? Well, we'll adjudicate on that in just a moment. Then we've got the independent analyst Ian Cruickshanks with Wescoal. Come on, he is joking. Banking sector, Firstrand. If you're going to go into the banking sector, perhaps Firstrand is the place to go. But my word, oh, banks, I just don't know where they're going to make their money in the next 10 years. They've milked homeowners, they've milked credit card carriers, and now they've milked the unsecured lending market. The cow is potentially quite dry and needs some extra feeding before she starts bringing any more milk to bear. And then Naspers. Yes, we like the story. It's a fantastic story. It is South Africa's most successful export after SAB Miller. What do I do? Let's take a vote. No, nobody else wants to vote with me, so I've got to make this decision. It's a vicious and it's a hard decision. Nic-Norman Smith, I think you should stay. Ian Cruickshanks, regrettably, you must go. And the thing that rescued Nic-Norman Smith was the fact that he made a compelling argument against Naspers. It's a tough argument to make against a rising stock, but it's an argument that investors need to pay attention to, because so often we get the good story. This is trading at a multiple of nearly 50 times. Its earnings grew 20%. I asked the question myself, of course, Becca, this week, can you maintain the earnings momentum to justify the premium that the market is prepared to pay? And I didn't get a great answer. So on that basis, sorry, Ian Cruickshanks, he is going to go and play hide and seek with that nice man who's spending time in Russia's no-go zone. We're hosting another Battle of the Minds and the most vicious stock picking show on TV next Tuesday, right here on CNBC Africa. Look forward to seeing you then. Please let me know if I made the right decision tonight and which stock picker impressed you most. We can always bring him back from Never Never Land if we need to. Tweet me your share shootout suggestions and your thoughts. My Twitter handle, @BruceBusiness. Until next time, we'll continue to pick a winner and shoot out the rest into the ether. Good night.